Okay, welcome back. You got the market, which is up about 100 plus points. 22,150 is where we are at right now. Look at the drop-off which has happened from the day's high, as I was talking about. And, you know, a close, a decent, nice, solid close above the earlier high would be nice to kind of go home with. Dinshaw Irani is with us. He's CEO at Helios Mutual Fund. Dinshaw, great to have you with us here on the program. Thanks very much for your time. What should we start with? Markets at a new high, some of the individual bets. Okay, we'll leave the market for a little later. But let's start with some of the individual bets that you have. And in many of these, like HDFC Bank or Paytm, things are evolving. So let's just start with HDFC Bank, Dinshaw. What have you done, if anything, over the last month or so since the results came through? I'm sure you've got an analyst at the analyst meet, the analyst day, which is going on, and we'll, I guess, get more details later today and tomorrow. But what have you done with that position?
So Prashant, I wasn't. I knew that you were going to ask me HDFC Bank and Paytm both. So let me start with HDFC Bank first. Okay. So basically, look at the facts, look at the figures. Okay. If you were to look at the market cap of HDFC Bank prior to the merger, it was around $112 billion odd. Right? Post-merger with HDFC, the market cap today is $130 billion. So it's an incremental $18 billion. Now look at what HDFC Bank got with the merger. If you take away the public holdings, the 50% odd holding that HDFC had in, say, Life and AMC and Credilio, 90% odd in Credilio, these three together would be around $14 billion of market cap, right? So what you're left with is a residual $4 billion of additional market cap, which the market is giving to not only the listed entities, the stake of, say, HDFC and Bandhan and Yes Bank and so on and so forth, but also that $74 billion odd of book of the outstanding book of HDFC Bank, the housing loan book. How can that be justified? It's a matter of time before, some semblance will come through. The only mistake that we can think of that HDFC Bank was that probably it didn't go so aggressively in garnering deposits in the quarter ended December. But I think that's behind us now, and obviously they took a prudent call that they don't want to get into a rate war at that point in time, because anyway liquidity is in a crunch period right now and remains so also. So our feel is that probably another quarter of maybe waiting it out, but we're fairly convinced that going forward, things are going to only look up, and maybe that is the stock which is going to lead the rally in the financial space.
You know, a lot of people are saying that deposits are going to get expensive. Low-cost deposits itself are drying out. And at the same time, a lot of the consumers of capital are moving to other sources of capital as well. So fundamentally speaking, would it make sense to look at some other people who may have more deposits right now, better loan deposit ratios to perhaps fuel growth till the time HDFC Bank garners its deposits and gets ready for takeoff?
So Mangal shows, so basically the franchise is the bet you want to take on, right? With this kind of franchise, there's no way HDFC Bank can be lagging in the race as such. And anyway, as you rightly mentioned, that if prices are going to move up, if they're going to get repriced, I'm sure it'd be far lower for a franchise like HDFC Bank than for any other player who's in the market. Yeah. So obviously, if again, at the cost of repeating, if others are gonna, if HDFC Bank loses its shirt, others are gonna run around without clothes, right? That's a statement which I made last time also, which was attributed to Puri, and I sincerely believe in that, right? So I think we would rather stick to this. In fact, in a rising deposit rate scenario, you want to be with the good franchises. You want to be with ones who have controlled their asset quality and stuff like that. Yeah. So that's why we would rather stick to the best in the field and go around looking for some other bets.
Dinshaw, hi. Well, I have to ask you the second question then, right now that we're done discussing HDFC Bank. Paytm, so the January fact sheet said that you had about, 2% of the holding. Now, I don't know, we're in February and then everything changed, the world changed. So I'm not sure if you're still holding on or you pared down. So what's been the thought process, given that this has been, pretty much a life-altering event for this company?
So Shruti, basically we didn't pare it down, the market pared it down for us. from probably 2% we went down to 0.8 or so, purely by not doing anything. I mean, basically because the first, I think 40-45% was you couldn't even move a muscle, right? Everything was in circuit. So, and finally we decided that the call we took was that, look, I mean, this is getting overdone. Unless the call that is being taken is that all the businesses will go down to zero, then probably that price was justified, otherwise not. And I think we stand vindicated. I mean, as in, you know what has happened, right? They allowed, apart from the wallets and the banking license, the payment bank license, I think everything else is in status quo. In fact, that's what the company also is coming out and advising about it. So I think we are more or less done with the correction. And from here on, probably one has to look at, so if you were to look at the price prior to this whole event happening, which was say 31st of December, I think the price was around 650 odd bucks. Obviously, that will not be ever touched again. I mean, in a while, that is. Business has to catch up before they touch that levels. But some semblance will come back, probably 30% lower than those levels. Probably, I don't know. I mean, I'm just taking a guess because that's the kind of loss that one has seen in his business per se. So maybe that is what you may look at some point in time. Otherwise, we are planning to hold on to it, right? Not add any more, but hold on to it.
Do you expect a decent kind of sort of repair on the name? I mean, not back to those levels, but with some of this settling down, do you think there's a move here? Yeah.
So Prashant, yeah, I feel so. I mean, otherwise, Axis Bank would have touched it, right? I mean, I'm sure they have seen something in that, and it's a fairly nationalized, I mean, large national bank as rather national spread is national. So it's obvious that they've seen something in this, and there's a lot of potential. I mean, you look at the platform that Paytm has developed, right? There's no parallel to that. I mean, we can look at the others who are in the field and always compare the valuations with them also. It's probably not even half. It's like 1/4 of the others who are there in this field and who've done the same. So I believe, yes, there's a fair bit of repair in store for Paytm. Obviously not the levels that were there earlier, because one big chunk of the business is out of the book right now. So our feel was that 25% of the profits were lost in this whole bargain as such, and that may be the level that one can see the correction from those earlier levels that one can see in this price, I suppose.
Okay, now that we've spoken about two of the difficult stocks in your portfolio, let's talk about one that's working really well, and that's MCX. Our colleague Sudarshan is joining in because we've been looking at a lot of the brokerage commentary on MCX, which has been sure very quickly to go back to not just MCX, but beyond lenders, you've got a lot of other market infrastructure institutions. I think you have a wealth manager on the BFSI side of the portfolio. Just wrap up the BFSI thought process for us.
So basically, I mean, if you look at what happens when per capita move up the way they are expected to in India, it's obvious that the financials are going to do well. I mean, banking is one obviously big segment. The other one is obviously the ones which are market facing, and we call them gatekeepers to the wealth as such. So that's obvious that those are the guys who are also going to go up, because ultimately you have to have vibrant stock markets for the economy to do well, right? And that's what these wealth managers that we hold are expected to do. I mean, as in guide the capital into the right spaces to increase the wealth of not only their investors but also for the country as such. So that's the call we've taken there, and plus we have other participants also, which are market-related participants that we got apart from the wealth managers. So that's how we're playing the whole segment, I suppose.
All right, let's give you a softball then here, Dinshaw. Zomato, that's been doing extremely well for you. But on the other hand, you also have some exposure to other QSR players, Westlife, for instance. What are your thoughts here? I mean, will you continue to play this space via the aggregator who sells everything? Or will you look at some specialists like Westlife, Jubilant Foodworks, and maybe Devyani and Sapphire?
So Mangal, when you're developing a portfolio, you want to set up a relay team which is going to run a marathon. But and obviously you need to have these set of leaders one in place. So maybe Westlife hasn't done well for a while now, but it's probably Zomato which has taken the baton from Westlife and started running the lead. So that's the whole logic here. And ultimately, when you're developing a portfolio, you need to have these flavors in the market. So that's why we'll never have a FOMO kind of a feeling ever, because we already have, we know that there are a lot of stocks which do well in the market, and that's why we need to be in the right spaces. And ultimately, they will take care of them. And Zomato has a long way to go. So does Westlife, though. I mean, as in the QSR space. But I think that's how we want to play this.
Are you not a fan of pizzas?
No, actually, one, too much calories. The base has a lot of calories. And secondly, too much competition, I suppose. So better stay away.
Speak about a cheesy burger having less calories than pizza. I don't think so, but
Yeah, they do. Believe me.
No, a lot more area, right, on the pizza. I mean,
yeah, but pizza is horizontal.
Layering
Pizza
the
burger is vertical.
surface area. So get to. Dinshaw, anything new you've sort of come upon? Anything you're working on? Any theme you like? What are you looking at?
So basically, Prashant, we're looking at some stocks in the renewable space. So let's see how that comes about. I mean, it's still early days, but as and when that comes up, probably we'll be more comfortable talking about it now.
Okay. I mean, renewables. All right, that's interesting. But you've not bitten yet, right? You've not
No.
gone in yet. Still working on it.
No, yeah.
Got it. Then shall we leave it there? Thank you very much for joining us. Great speaking with you, and appreciate your time here, as always, on
Thank you.
CNBC-TV18. Well, that's Dinshaw Irani at Helios. Well, the markets come off now.